when it comes to the bull market, are we staying on the 4-year cycle? Are we gradually grinding up the 4-year cycles dead and over? Or is history going to repeat itself? That's what we're going to take a look at today. So what I'm going to do is I'm going to share what my previous predictions were for this current bull market, which we're in, when I believe the peak would have happened. And this is something I put videos out about, but I'm going to go back and do a review of that data. And then what I'm also going to do is go ahead and share potentially why this cycle could last much longer than we originally anticipated based on the history of the 4-year cycle. Okay? All right, so let's take a look at the previous predictions we took a look at here. So what we're doing is we're looking at the Bitcoin previous halving dates, and then you can see that typically it's about 12 to 13 months after an all-time high would be an all-time low. That's actually the bear market, but anywhere from 12 to 18 months is what we're looking at. And really there's some consistency that we're seeing. Usually it's in Q4, that post-halving date. If we go to the next one and we take a look at some of these, what we're going to see is that typically the cycle, if it stays on the 4-year cycle, is going to be about October, November of 2025. And then what we did is we took a look at from two ways what those peaks were potentially going to be, right? And if we say that historically the previous all-time high has created the next floor, we can actually work up from that. And you can see here that these cycles have been gradually decreasing over time, right, at about 3% per cycle. So if we take a look at this, we're going to say there's about a 74% drawdown if we stay within the 4-year cycle, right? So from the 69K floor of the previous all-time high in the last cycle, that gets us to about 265K come October, November of 2025. Now, that's coming up quick. I mean, right now it's August. We're midway, halfway through August, and then that gives us September, October to go from 118 to 265. That's, to me, seems optimistic and aggressive, right? So then we have to start asking, well, what if this cycle plays out differently, right? And you've seen a lot of the correlations between M2 money supply. You've seen a lot of correlations between interest rates that are going to drive up asset prices. So let's play into that one just a little bit, okay? So what we did is we're going to take a look at how that could be one instigator for the extension of the bull market. Right now we've got Jerome Powell, who is the chair of the Federal Reserve. Ironically, he was appointed by Trump in his previous administration. When he was president, he did appoint Powell, and now you can see that they don't agree at all on a lot of things. And mainly Trump is trying to lower interest rates. So let's do a little game theory. Let's connect some dots that might not exist, but we're going to have a little bit of fun here, right? So one of the things Trump has said is that there's a huge focus on lowering the interest rates. A couple reasons. One of those is by lowering interest rates, we've got, $36 trillion in debt. It's unsustainable. These can be refinanced coming up, but they're going to want to do that at the lowest interest as possible, right? So that's one driving factor. Another driving factor we have to keep in mind is that the Republicans want to continue to win in the next round of elections. And we've got the midterm elections coming up in November of 2026. This is absolutely crucial for the Republican Party to win in order for the pro-crypto environment to stay consistent. Historically, the Democrats have really fought and attacked crypto in the Biden administration. Maybe things have changed. The environment's different. We've got BlackRock, we've got huge institutions, we've got governments buying Bitcoin. Maybe this is a nonpartisan topic going forward. That would be ideal. But let's just operate under the previous administration's actions because those speak loudest. And there was a major attack on the crypto environment, Bitcoin, and everything else, right? So let's say that it doesn't become nonpartisan. It'd be great if it was. Bitcoin's nonpartisan, but the policies that are put in place, we're just going to operate on that piece. So in order to have the most pro-Bitcoin environment, what we're going to need to see is that the midterms would be Republicans are trying to win that. Any incumbent's trying to win that. Doesn't matter what your political viewpoints are. Whoever's in office is going to try and stay in office. So the whole game plan for Trump is let's stay in office, right? And so one of those ways is by lowering interest rates that usually boost asset prices, that can boost the economy, that can boost more money into the market, which is going to drive asset prices higher. When the stock market is doing good, people are happier, they're more likely to vote for the incumbent than when the economy is tanking, right? So a lot of this, if you follow the money, the goal is we have to do what usually takes 5-10 years. We got to do it in the next less than 12 months to really get this economy zooming and going crazy and try and front run the elections. Now those elections, again, are in November, but you're going to start to see some of the campaigns starting even now. I mean, but really you're going to see the primaries between March and September of 2026. This is when things are going to really get hot, when the incumbents need the economy to just be going just absolutely gangbusters. So Q1 of 2026, it's crucial. Q2 is absolutely crucial. And then obviously Q3 leading into those primaries. So 2026, we could actually see, this is again not based on the I'm going to say Bitcoin fundamentals. This is more based on macroeconomic environment that's driven by some of these political cycles, right? So I say all that because this could be an indicator, and there's a ton of indicators to Bitcoin's price action, and nobody knows. Nobody has a crystal ball, but we're going to have a little bit of fun today. So Jerome Powell's seat, Federal Reserve seat, chair seat, is up in May of 2026, okay? He will be replaced, right? I mean, Trump's been talking about firing him, getting rid of him, all that kind of stuff, right? So he'll be replaced. He'll be replaced by and appointed by somebody that Trump wants in place. And what does Trump want? He wants interest rates lowered, right? So we can expect that change to occur. Then you have to ask yourself, the Federal Reserve is made up of 12 seats, right? And then there's a board of governors, which is 7 votes of that 12, blah, blah, blah. So if we take a look back historically, what you're going to see is that the Federal Reserve is primarily, there's 2 individuals that have aligned themselves most closely with Trump, and the rest have not, right? So that's an indicator of what's also going on. So if we take a look at this, we've got Michelle Bowen. She was a Trump appointee. We've got Christopher Waller. He was a Trump appointee. Now, recently, I believe it was last week, there was an announcement that went out that Kugler is now a vacancy. Kugler has left, and Trump is likely to nominate Stephen Miran. So now you go from 2 of the 12 to 3 of the 12 that have been appointed by Trump. And then that chair slot, Powell's up in May of 2026. So that's 4, right? So they just doubled the amount of direct Trump appointees to the federal board, the Federal Reserve board seats. And so, or vote, I should say voting seats. And so that's a shift. But then you have to ask yourself the question, is just because somebody was or was not appointed by Trump, are there individuals that are pro lower interest rates? Some are, some aren't. So this will be interesting to play out. But that is going to be a shift, and the biggest one is going to be Jerome Powell getting out and somebody being appointed by Trump. So they meet. So that will happen in May of 2026, and then I'm just looking at the schedule here. So they have meetings throughout the year, and so this could be another indicator for us. The next meeting after that to take place, I believe, yeah, so it's June 16th and 17th is the first meeting after Powell's term ends. So that could be an aggressive play to really set the stage, set the tone that interest rates are absolutely going to get lowered. Now, if we go to the betting sites, right? Right now, it's looking like there could already be interest rates being cut due to taking a look at some of the jobs and the inflation numbers. But overall, we really would likely, if this plays out as Trump would like, start to see in June of 2026 aggressive lowering of interest rates, right? So what that means is that is a positive bullish indicator for Bitcoin and really all asset classes, but Bitcoin in particular is what we're focused on. And so that means this cycle could push out into next year and really extend it, right? So if we do that, let's go ahead and take a look at the Bitcoin. I always like to come back to the Bitcoin power law, and we're going to take a look at how those dates would play out, okay? So right now, what we're going to take a look at is what I had previously said as potential all-time highs, right? Around that October of 2026. And then we're going to go ahead and take a look at, let's say it runs until the midterms. Let's say it runs until November of 2026. And take a look at that. So actually, let's just go November to November. So if we start right here, you can see here, anytime we've gotten into these bull runs, we've gotten well above this green linear regression fit, okay? And you can see here, we are just sitting here right on it. We have not gotten into any territory of really a breakout, which you're going to expect in a cycle like this. So if we go to October of 2025, what you're looking at is the linear regression of 133. Now keep in mind, we run above that in these types of time frames and environments. So Josh Mann, if you follow him on X or Twitter, what you're going to see is he's called for 444,000 per Bitcoin. Now, he has not given a date, and I don't believe he's saying that will happen in 2025. All the indications of me reading between the lines actually indicates that I think, could be wrong, I believe Josh believes this goes into 2026 when we see that all-time high. Then he says the floor is about 84K. So let's go ahead and let's take a look at this, okay? So let's say this does get extended, because for us to go from right here from 118 to 265 by October, I just don't see that happening. So, and it wouldn't be healthy. We would shoot up and we'd shoot back down. So you kind of want this, just these more gradual increases. So let's run this out until November of 2026. Okay. This is making a little bit more sense, right? So if we're taking a look at this and we're saying that regression line is at 192,000, okay, cool. That alone, even if this cycle extends out into, let's take a look at this, let's say June, when they first do the June. So you're looking at 165K. And then if we go to November, by the time the midterm elections are, you're at 190,000. And that's just us chopping along at the linear regression line, which is not historically what we've done. So if you actually look at that resistance level in purple, you're going to see there that would be $700,000. Now, you can see here, this has actually been kind of going down. We peaked above in the 2014 cycle. We peaked above that resistance line in 2017. We touched it, and then you can see in the most recent cycle it was tampered down a little bit, and we were at below that. So let's say that we're even around the same range or less, that 444,000 that Josh Mann is talking about holds up, and then this aligns with us kind of chomping along and gradually increasing, in this banana zone potentially happening or starting in Q1 or Q2 of next year, maybe even Q3, which would be wild if we extended these cycles out that far. Okay, now the next thing we do is let's take a look at 84K as the floor, because that's what I'm combining a few things. So 84K gets us to July of 2027. So let's just work back from this, right? So typically, again, if the extension gets expanded, excuse me, if the cycle gets expanded for the bull market, you would expect the cycle to get extended for the bear market, right? And so let's say we peak in that November, I'm just making stuff up, and peak in that November timeframe. It's kind of interesting here because typically after an all-time high, we hit the floor within about 12 to 13 months. So in theory, if that cycle stays the same, I mean, we're getting way out there, guys, but like if that cycle stays the same, we could almost back into a potential peak. So let's say we've got July of 27. So let's go to July of 26 and just take a look at what that number says. July. So 168 or 5. I mean, that kind of adds up, right? If we don't completely get to the top, you can see $444,000 in the summer of 2026. So anyway, having a little bit of fun with this. A lot of conjecture, not financial advice. Just kind of having some fun, making some stuff up, combining and mixing and matching trends that probably don't exist. But ultimately, if you believe that interest rates is a tailwind for Bitcoin, you can start to expect those interest rates potentially to start coming down now. But when the new Fed gets in place in Q2 of 2026, I would expect rates to go down. I would expect Bitcoin to respond in price action upwards, which would mean we could actually see extensions of this cycle into 2026. So let me know, provide your thoughts, comments, all that kind of stuff. Let me know what else you think if we are in the typical 4-year cycle, if you believe that we are just simply in an extension and there will still be a dramatic drawdown. I could still see 70%, 50 to 70%, 30% for sure. So let me know your thoughts on some of those things. Like and subscribe below. Keep stacking those sats and stay sovereign. Thank you.